so a lot of things happening in October. So let me just give you a quick idea of what's happening in the market and what do we expect in October. So if you see October, right, October month is going to be very, very, very volatile with respect to how the market is going to go. So you should do one thing. You should definitely go through, one second. Yeah. So yeah, the entire October month is going to be super volatile. The reason why it's going to be super volatile is because there are multiple data points coming out in the market, right? Especially with respect to US. US's job data is coming out, statistics is coming out. Their inflation is reaching a big issue. I don't know how many of you all are looking at the US debt crisis. If you have looked at what's happening with the USA, like with respect to its debt, they've reached a point where they can't take any more debt, right? They've reached a debt ceiling. So now what the government is saying that we want to increase this debt ceiling, okay, so that we can borrow more money from the market. And the other side, which is I think the Republicans, they're saying no, we're not going to pass this bill because if you increase the debt, फिर आगे का generations को बहुत problem होने वाला है. The future generations will have a massive impact if you increase the debt right now. And they're like, no, we want to increase the debt ceiling so we can take more debt. And if we take more debt, all this is just going to create a massive issue. So that is going to happen. There's also another, the RBI meeting committee is also going to sit to decide whether they're going to change the interest rate or not. Most likely they might not change it. But looking at how the US market is going, and the US market had fallen 4 days in a row. Only on Friday, the Dow Jones and the S&P 500 had actually gone up. And because that went up, today you see that the market is also going up slowly, right? Now, because of those two things, the market is going up today also. Correct? Understood? So this next month of October is going to be very exciting. It's going to be very, volatile, up and down. But this is only for people who want to invest with short term. Now, we are people who invest in a long term perspective, right? We want to invest with 3 years, 4 years, 5 years into the future kind of a thing. And if a lot of people are saying that this is the start of a bull rally, the bull rally is not over, it's just beginning. It's become the mother, it's going to be the mother of all bull rallies. And assuming all that is true, we need to look at from a futuristic perspective. Now, if you guys are fundamental investors and you're going to invest in for the future, right, then you need to prepare yourself for futuristic investing. Now, there are a lot of ways you can find stocks, right? For that, you need to find out the good number of stocks. There are a lot of ways you can find stocks. Either you find stocks by yourself, right? You do screeners, you use screeners, different kind of screeners, put your own parameters, find good stocks, do good fundamental analysis, and then invest in those good stocks. Or you follow people like me where we keep coming out and doing some review on good stocks, and then you figure out whether it's good or bad for yourself and start investing in them. Another way you can invest in stocks for the long term is you invest in mutual funds, right? That's also fine. You can find a mutual fund with a high expense ratio. The only problem with mutual fund is high expense ratio, might be 1%, might be even 2%, which might eat into your profits. But you can do that. Just like Shashank, I'm not an expert. I don't have any idea when it comes to investing in, when it comes to investing. So I want some expert to handle my money, right? So this is number 2. Now, if you don't know how to do that, you don't want to do mutual funds, and the third option that I use and I've kept telling you guys is small cases. Now with small case, I had done one small case in the past. Do you guys remember? With small case, I had done a small case in the past and I'd given it to you, I think in Feb. In Feb was when I gave you the small case. Now that is something that I was managing offline, obviously, because I'm not a SEBI registered advisor. So that is not for you to invest. That is only for me teaching you guys how fundamental analysis works. And I promised you in Feb that I will hold this for 1 year and show you how 1 year profit looks like, right? And I won't do day trading and etc, etc. Now after that, I did another video called paid versus free small case, where I did a comparison of capital mind, momentum investing, and there were a lot of free small cases there. The only problem with the other things, like for example, capital mind investing or weekend investing, a lot of people might have invested. It was very expensive. These paid products were very expensive. Now, why is it expensive? Because obviously the people managing it are, very, very, very famous people. Like there's Alok Jain and there's Deepak Shenoy, really famous people managing these type of portfolios, right? With considerable amount of returns. Obviously, whenever you invest in something, you have to expect risk and you have to expect returns also at the same time. It can go down, it can go up. Then a lot of people said, okay, can you review some of the small cases that are there on their website right now, right? As we speak, there are some small cases on their website, and I was doing this in the weekend research session. Now, what we had observed last time was there were a few small cases that were free before and then they became paid. Do you guys remember what I'm talking about? We did this in the weekend research session. Now, for all the people who've invested in the free one, no problem, right? For you guys, it's completely free still. You can use it all the time for you guys, right? But for all the other people who have not invested in this, I'm trying to find budget friendly, because if you want expensive small cases that are paid, there's one video that I put out called free versus paid small case. It's there on YouTube. Just go search it. Now, today what I'm doing is I'm trying to find not very expensive, slightly cheaper ones which you've known in the past and has given good returns over a long period of time. So I'm going to find that. Can you please share the small case links? Okay, so for all the people who want to do this with me, the small case links are already in my description. You can check it out, the 3 ones that are there. So all of them are there. Let me actually just share my screen. It's better. Okay, one sec. Screen share done. Okay, so let's look at what is the market today. Okay, so basically Paytm IPO is coming out, so that's going to be a big boom in the market. If you see today that the Sensex has gone up by 590 points, Nifty is up 171 points, and Nifty Bank is up 396 points. Now it is up today good because the last 5 days, look at this, the last 5 days you see that Sensex has kept going down. The reason why Sensex has constantly gone down in the last 5 days is because the global markets were also doing that, and we are people who keep looking at global markets also, right? So when the global markets kept going down, we also kept going down at the same time. But that's okay, that's fine, completely all right. So if you look at the market trend, by the way, can someone tell me why October is also very important? Lot of people believe, especially experts believe, historically October has always been a very good month for India. Can someone tell me why? Why is October considered a very bullish month automatically? Right? Festival month. Wow, smart guys. Yeah. So I'll tell you why it's considered good months. Because first, it is a result season, right? So if you see HDFC Bank's result is coming out very soon, you see festivals happening, Diwali. So there's a build up to Diwali. Abhi Ajinkya ka birthday bhi aa raha hai, but not because of that. But you see that a lot of festivals come at this point, which are good festivals, right? Second, you see Diwali coming. Diwali, which is the main festival, and then in Diwali season, a lot of people go buy automobiles. Right, you know that's the only thing in India, right, where we go buy cars, and even car manufacturers come and give some massive discount, right? So it is a very bullish month for India. And if you look at October, a lot of money flows into the market. Obviously, money is flowing. By the way, FIIs have started becoming net buyers again. So a lot of demand for products. Bonus, yes, someone said bonus goes out in the market. A lot of nice dividends come out. So basically, it is very bullish. You get my point? It is very, 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 very bullish. It's not a bearish market. October or leading up to Diwali is always considered a bullish market, right? So we are in that space right now, which is considered a bullish market, and a lot of people are predicting, will Nifty hit 18,000 points, right? Will it go to 18,000? It's at 17,700 as we see right now. Will it go to 18,000 is the big question, right? It's as equal to kya aapke toothpaste mein namak hai. It's that important. Will it go to 18,000? Nobody knows. Or will Bank Nifty go to 38,000? We don't know. Let's see. But it's a good thing. Yeah, IT results are coming, bank results are coming. By the way, all the results that are coming are big results. Like for example, HDFC Bank has a massive weightage in the Sensex, right? Massive weightage in Nifty. So if HDFC Bank gives a good result, you'll see Nifty going up, right? So that is very important. Now, all that is fine. I'm just giving you a quick example of what's going to happen in October. But again, so October is predominantly a bullish year, but if you look at the global trends right now, they might be pushing us down, and India is trying to grow. So we don't know what's going to happen. It's going to be very volatile for the next few months. So I don't know what is going to happen, right? We'll have to look at it. We will have to look at global data. We will have to look at India data and figure out what to do. Now, let's look at some, so I came to the small case website because one of the things that everyone kept asking me was, can you give us some good small case recommendations, right? Whether with what is good, what is bad, according to you guys. Now, for all the people who are college students, right? Firstly, for all the people who are college students, this is something that I liked for you guys. Top 100 stocks for college students. Now, for college students, why I'm telling you this is very good, because the investment amount is 1,200 rupees. It is completely free. Top 100 stocks bolke hai 1,200 rupees. The same, you can just go to the small case website and check this out, or I can put the link below. It doesn't matter, right? And this basically is like an ETF, right? So you can actually check it out. Let me just log in. Give me one sec. Because when I log in, I have to open my Zerodha thing, and also I have to open my other statements. Okay, very quick login. Chalo. Very nice. Yeah. So we go back to not dashboard. We go back to the main small case thing. Okay. And then we go to discover. Now you'll see all the small cases here. So either you can do top 250 or you can do top 100, right? why I'm saying top 100 is good for college going students is because it's free. You can invest in it, and it's an ETF. ETF is basically an exchange traded fund. I've made a video on it, and it just tracks tracks the entire Nifty index as well. So there's no much complication in this. There's also 250. Yes, if you want to do top 100, this is the case. If you want me to compare this with top 250, let's compare that also, right? Let's go to Discover. Top 250 also free, slightly more, 1400 compared to 1200, 200 rupees zyada hai. But if you look at the performance in the last, let's do 5-year performance, right? 207, 206, pretty much the same thing, guys. So either top 100 or top 250, up to you guys. This is for college going students, right? This is for college going students, not for anyone else. This is for college going students. Now this is number one. Now if you want, there are multiple free ones. So today I'm not doing the free ones. I'm going to show you the paid ones because there were a lot of free ones that became paid ones, right? So I'm going to show you them. Now out of the three, one was CanSlim. How many of you will remember CanSlim in the past? Right, CanSlim was something that was very famous. How many of you all remember CanSlim? Now I'll tell you what CanSlim is. It's a technique done by William O'Neill. If you have read one of his books, I should have shown you which book was that. So CanSlim is basically an investment model set out by William O'Neill, and he has a very good book that you guys should read, right? So this was something that was very famous, and to give you an idea of what CanSlim is, I've opened it up here on Investopedia. Each of CanSlim represents something. So C is basically current quarterly earnings per share has increased sharply from the same quarter earnings reported in the prior year. What this basically means is EPS growth of 20% should be there, right? EPS is earnings per share should always be going up. Then A is basically annual earnings in the last 5 years also should be going up. So CA is done because we know this very easily, right? Now N is something interesting. N basically says new product management or new events. Basically any new product that comes out or management or new events that is pushing the company stock to new high should be considered, right? This type of headline news can cause short-term excitement propelling the stock. So N comes into new products. Ideally, if anyone is innovating really well and creating new products, not like some other phone brands that don't innovate at all, if they innovate really well, then it helps you guys a lot, right? That is what it is. Now S is scarce supply. Okay, scarce supply is basically too much demand, less supply. Demand अच्छा है, supply नहीं है, तो उसमें आ जाता है. That is S. L is laggard stocks, right? Now laggard stocks are basically stocks that are not moving as fast as possible. They're lagging behind. So the RSI indicator, there's a relative strength index called RSI, right? Now relative strength index, it's in slightly technical terms, but basically what it says that an RSI reading below 30 suggests the stock is oversold and could be undervalued. So we want to find something that is in this range, right? Obviously, which is something that is not moved fast enough. And we are trying to find such stocks that are not moved fast enough and can do really well. Now, I of CanSlim is basically they should be sponsored or they should be having some kind of institutional investment. Why is institutional investment important? Institutional investment is important because obviously if institutional backing is there, big money is there, and if big money is there, it is considered very good. Finally, M, determine market direction by reviewing market averages daily. Now, what is the market direction? Are we in a bullish market or are we in a bearish market? For all the people whose screen is not clear, I think you should increase the video because for me, I think it's looking clear. I'm not sure. If everyone's having this issue, then it's an issue from my side. Or else just increase your thing, right? Now, this is what CanSlim is. Now, CanSlim is a very old model, very old financial model that was determined. And this basically is a CanSlim-esque model where basically this small case invests in CanSlim companies, right? And it's clearly given here. I'm going to zoom in slightly. It says consists of companies that have recorded greater than 10% earnings per share growth over the last 2 years, have high return on equity. High EPS growth and high return on equity indicates companies making money at a fast pace and managing capital efficiently. So this is basically, I think this is run by Windmill Capital, which is again small cases team that is sitting and doing this entire small case and rebalancing it and managing it for you guys, right? So it is not something that is something like how I do. It is something that the small case team itself does, and the small case team only will rebalance it. So automatically you get rebalance updates everywhere. Okay. One second. Now, is it good to do SIP or lump sum while investing in paid small cases? I personally do lump sum. I'll tell you why. Because if I'm keeping it for 5 years, I'm just going to do lump sum and leave it. Whether it goes up or goes down in the long time, I know that it is going to go up, right? that's my logic, right? I usually invest lump sum. I don't believe in averaging too much. So if I have to invest, like for example in Capital Mind, when I invested, or when it was weekend investing that I invested, I just do one shot, one time investment and then leave it. Chhod do. Don't over engineer it. Don't try to do all that, right? Now this is currently, if you look at it, obviously I can't show you the stocks because you have to subscribe to it. But this is basically 40,000 rupees if you have to invest even one time, right? And then after that you can keep investing multiple times. This, I think the cost of this now is 2,000 rupees for 3 months and 6,000 rupees for 12 months, right? And I put one, so as I told you guys before, I spoke to the small case team and I've got you guys on discount. Okay, that discount, I think I've put it in the description below. Yeah, so the discount is called OCT 15 or October 15. So basically all my users or whoever watches my video will basically get 15% discount for whoever wants to buy. So you guys can go here and just use that coupon code and buy it. That's up to you guys. But I prefer lump sum. That's what I'm saying. Now the second one, now this, understand the theory behind everything, right? Can Slim ka kya tha? I want it for the next 5 years, I want growth. So if you look at the CAGR returns, 5-year CAGR returns is saying 33. Even if you don't want to do CAGR returns, just go back to 5 years and see if you had invested here in October 4, 2016, by now your money would have been 3.5x. That's what the logic says, okay? Now, if you check the next one, the one that I found it quite interesting, again from a long-term perspective. This was my favorite before it became paid, right? This was my all-time favorite. Why? I'll tell you, because iska minimum investment amount kam tha, like it had only 14,000 investment amount, but also giving decent returns, right? If you look at the 3 years and 5 years returns, it was giving good. So this basically tries to find stocks that are growing really well, number one. And also what happens is, generally growth companies have a lot of investment opportunities to reinvest their earnings and not pay dividends. Do you guys know what happens when you pay dividends? Whenever you pay dividends, right, whenever a company pays dividends, that's money going out of the company, right? Money going out of the company. So if you invest, if you take that money and if the company says, I'm not giving dividends, I'm going to keep this money and then reinvest it back, and I'll get one more manufacturing plant, okay? Or it's called capex, as you call it very clearly, right? So if you invest again and you make a capex investment, that also helps a lot. So if you do capex investing, that also helps a lot. So these are small things that actually make massive growth. So this is the next one, right? So this is called growth at fair price, which is called, and if you look at the returns, quite good. Again, same cost, 2,000, 6,000, 15% off if you use it. But only advantage here is it's giving 14,000 rupees is your investment amount, right? 14,000 is the investment amount for this perspective. Now the third one is slightly different. Now third one, I'm not going for growth. Now there were a lot of people asking me this question, right? There are a lot of people asking me this question saying, you know, I want to invest my parents' money. I want to build an emergency fund. I want steady state revenues, means some kind of revenues, cash flows coming into my bank account always. So for that, I would say this is basically for long-term investors. Dividend returns are very important, and it also provides you passive income. Right now, if you have a lot of money that you want to invest, or your parents' money you want to invest, you have to go find high dividend paying stocks. Right? High dividend yield, high dividend paying stocks. Now, if you have to find high dividend paying stocks, right, you can do that manually, and then you have to keep tracking it all by yourself, or you can just go buy a mutual fund and do that, or you can come here and buy this, right? It's either or. It's up to you guys where you want to go do whatever. But understand how percentage works, right? So for example, let me give you an example, right? If you invest in a mutual fund, say assume you invest 1 lakh, you have to pay 1 to 2% annually as expense ratio. Right? But I would rather pay a fixed amount than pay a percentage of my gain, because if I'm keeping it for 5 years, that 1 lakh becomes 5 lakhs. Tomorrow 5 lakhs pay I have to give again 1-2%. So I don't want to give percent. I just want to give fixed amount. Right? So this is basically for those investors who want good dividends. So these are high dividend yield companies, okay, with a track record of not cutting dividends. Now there are some really big companies. ITC gives massive dividend, HPCL gives massive dividend. So this is that kind of a company, right? Now basically this market consists of companies that have maintained an average dividend yield of at least 2% over the last 5 years. Additionally, only the companies that have not cut dividends for last 5 years are included. So this is basically that. So here what it happens is, it gives you two types of returns. One is price return and one is dividend return. Now let's look at whether the profit is being made or not in the last 5 years. In the last 5 years, apart from giving the dividend, it has also given approximately 2.7x return, right? Apart from giving dividend, it has not why people are spamming, dude. apart from giving straight up returns, it also gives you some kind of price action as well. So price also goes up and you get dividend returns at the same time. So basically it's like a win-win situation for everyone. But this is not for people who if this is for people who want passive income, basically very clear, huh? This is for people for passive income. If you want just growth, then there's growth at fair price, but CanSlim is better, but CanSlim is higher investment amount. If you're saying Shashank, mere paas I don't have 40,000 rupees, that's fine, go for this which is 14,000 rupees and keep investing SIP type of thing every month. I would say as much possible, if you don't have capital upfront, do an SIP and keep investing it. At least aapka, you keep building your portfolio, right? And if you're saying I have a lot of money and I want to invest some amount of my parents' money, not all of it, say around 1-2 lakhs or 3 lakhs, I want to put lump sum one time and keep it, and I want consistent income, then this is something that is better. So these are the 3 paid small cases directly from Windmill Capital. It's from small case team itself. I have not gone and reviewed some other paid what do you call that, some other paid small cases as well, because they are different publishers. For that I have to go and do research about the publisher, right? Or else if I just come and tell you guys this is good, this is bad, then anything happens tomorrow, it will create an issue for me and you, right? So I'm not going to do something like that. I will only find things that are where the publisher is good. Small case obviously team is good because it's their entire bread and butter and they do this by themselves, right? So yeah, so these were the 3 things. One was growth at fair price, one was CanSlim, and one was dividend stars. These are the 3 things that I have shown you guys. And if you want, there's a discount coupon below called October 15th or OCT 15. Save some money so that you guys will be happy about it. Cool? Awesome. Now let's look at what's happening in the market again. Okay, market is still holding steady. So guys, just to conclude this, right? Let me just come back. Yeah, so basically this is a quick video, but just to conclude this, if you're planning to invest in this month, be very careful, because this month is going to be very volatile. I'm telling you guys in advance. Why? Because there are a lot of macroeconomic factors and a lot of microeconomic factors that are coming into play together, right? Macroeconomic factors with respect to USA and microeconomic factors with India being bullish on normal October, right, towards Diwali. So all these gold companies are already doing well, and we don't know how the market will react, because last 4 days, Tuesday, Wednesday, Thursday, Friday, market was down because the US markets were also down. Right now, US markets went up on Friday, so the markets are up today as well. But we don't know what the long-term trend is. After October 18th, we will figure out, because by October 18th, all the macroeconomic factors that I was talking to you about in USA, all the results would have come out, right? All the different data points would have come out, and then that will determine the new rally of India also, right? Because then we'll realize, okay, whether the US markets are going to go into a bullish mode again, or is it going to go into a bearish mode again. So that is what we will figure out. Again, I hope you guys like this video. If you do like it, please like, share and subscribe. I put all the links in the description below, so you guys can have a look at it. My small case I will review again in October, so you guys can have a look. Thank you guys, and thank you for bearing with me, and I hope you guys have a great day. See you. This is me, Shashank Udupa, signing off.